The Nasdaq just flushed 1.32%, yet our core conviction holding is printing fresh all-time highs again. On Monday, Micron wrapped up the close at $1,211.38, logging a massive single-day rip of 6.82%. Meanwhile, our private community executed a precise buy order back on June 10th, right around the $895 floor. In just 7 sessions, we are sitting on a clean 35.4% floating profit. The tape is copying our exact script. If you're trading these high beta semiconductor setups, smash the like button and comment below. Can Micron scale past $2,000 this year? Check the description to unlock our live desk metrics. The broader macro market was in a total bloodbath today, with mega cap tech facing a distribution flush. But Micron completely bucked the trend. Why? The street finally realized advanced memory is the core of the entire AI play. On June 22nd, Micron and AI unicorn Anthropic dropped a massive strategic catalyst, locking in long-term supply agreements and joint R&D for next-gen infrastructure, heavily tied with Micron participating in their fresh funding round. Retail chasers are asking, can a single partnership headline pack this much institutional power? Absolutely, because this signals that the entire global AI value chain is officially transitioning into a brand new phase. As large language models expand exponentially and enterprise training data multiplies, the mission-critical hardware layer of HBM, DRAM, and enterprise SSD infrastructure is being aggressively re-rated by big money. Think of it this way. If engineering an advanced AI model is like building a hypercar, the GPU is just the engine, while memory is the fuel tank and transmission. No matter how insane the engine is, it won't run without fuel. Micron is one of the rarest monopoly leaders, sitting right at the top of this AI memory food chain, commanding dominant market share across high-margin HBM, premium DRAM, and next-gen data center SSDs. This is why our desk maintains that the highest conviction fundamental thesis in tech is memory demand. As long as hyperscalers scaled LLM training and scale out multi-lot infrastructure, the order books remain backlogged. This structural certainty is why we front-run the dip near the $895 support floor during that early June black swan. The core fundamentals were clean, order flow was heavy, and the technical breakdown was just retail panic. Now that the short-term macro sentiment overhang has completely cleared, institutional liquidity has rushed right back in, and Micron is validating our thesis with consecutive green daily breakout candles. Currently, Wall Street targets show an unhinged spread from a $550 floor to a $1,750 ceiling, with consensus pinned at $1,300. But institutional desks are already debating if multi-year demand warrants a much higher multiple. Granted, after a vertical squeeze like this, short-term volatility and stop hunts will intensify. But looking at the data, the institutional whales are tightly huddled, and the macro trend shows zero signs of breaking. Subscribe and smash the like if this market breakdown gave you an edge. For our exact profit-taking targets and next asymmetric sector rotations, hit that link in the description to join our community desk. See ya!